Welcome to Witham Sounding Board, a podcast sharing powerful business tips, insights, and trends for those seeking to become a rock star in their industry.
Welcome to Witham's Perspectives from the Bankruptcy Cliff, where we provide a perspective on various questions related to insolvency and bankruptcy affecting individuals and businesses. I'm John Liska, and I'll be your host for today's session. I'm a member of Witham's Forensic and Valuation Services Group, and our team focuses on the unique needs of individuals and businesses going through a reorganization process, experiencing financial distress, or considering bankruptcy as an option. Today, I'm joined by Missy Urban, who is also a member of the team, to get her perspective on pre-bankruptcy planning. We do need to start out by reminding everyone that the information you're about to hear is general in nature and should not be acted upon without the advice and counsel of a qualified legal representation and financial advisors who can evaluate your unique circumstances. So with that said, let's get started. So Missy, I'm in trouble and I'm starting to explore bankruptcy as an option. What kind of actions should I avoid in preparing for this bankruptcy?
Yeah, John, when this situation presents, it's never an easy situation. What you don't want to do is get advice from friends and family that say, just do certain things, it'll work out in bankruptcy. You really need to be careful in the pre-bankruptcy arena. You don't want to start giving away and transferring assets. You don't want to run on credit cards, take on new debt. Some people think, okay, I'll satisfy, some creditors by pulling from my 401k or pulling from my retirement. Again, not something you want to do pre-bankruptcy. You don't want to pick and choose which creditors you're going to pay. There will be podcasts where we'll discuss this in more detail and what this means, but you really need to be careful what you're doing pre-bankruptcy, because it may be undone or it may cause other problems for you in the future. And one of those big things you're looking at is don't forget to file your tax returns. That's going to be a big red flag. And you also really just don't want to do this yourself. This process is best served when you get other professionals that can help you out move through the bankruptcy process.
Great. So if I'm going to reach out to a consultant, what kind of documentation should I get together in order to bring to them before the bankruptcy?
Yeah, you're going to want to be prepared, and you are going to want to show up with that pile of information, and you're thinking bankruptcy, so it's obviously financially driven. So that's where you're going to want to focus. So you're looking at your proof of income, you're looking at bank statements, tax info, mortgage statements, other loans you may have, car, personal. And you also you're going to have your credit report to show the situation as you stand that day, what position you really are in, how dire it may be for this professional to assist you, because that's going to be relevant if you're 30 days behind versus you've been 120 days behind with all your debts. And flowing from that, you're going to have collection letters. And then just the agreements you have, where it be leases and what assets you do have. And if you're in a fortunate position where legal proceedings have commenced against you in any arena, you really want to bring that to your professional, whether it be your legal professional or your financial professional.
So I've gathered all the information now, and I haven't done anything inappropriate before filing, but is there a right time to file? And if so, how will I know when to file?
Yeah, that's always a tough question. You obviously, if you are in that position, you're going to know your financial situation best. But the key is really not to wait until it's too late, because you may need the relief of the bankruptcy at a very early point, and you don't want to be too far into it and too much in the hole where it's going to be very difficult to get out. So that's kind of key. But what really you want to do is consult an attorney. You want to consult an accountant, because again, they're going to have that legal side, that unbiased side, and they're going to know sort of what your timing should be and what you should be doing. You're looking at, you're at the point of facing judgments. You're losing access to credit. That's a situation where you're going to need to take some action. And in recent, what we have going on with the pandemic, there's legislation that's coming down that may affect what you want to do when, because for example, if there's the CARES Act where you're suspending foreclosure and evictions at some point, that may influence what you do when. Again, best suited to talk to professionals, attorneys and accountants that will really work that in, because again, that can be very complicated. the interaction of that with your personal situation. But the real takeaway from this: don't wait until it's too late to talk to someone to see what you should be doing.
That's great. Now, should I start with an accountant? Should I talk to an attorney first? Is there any preference which way I go first?
Yeah, I mean, I think you want to be thinking, what is your situation? If you're in a situation where you have your sort of ducks in a row, let's say, for lack of a better phrase, and your books and records are together and you can easily present that, then I think you're best just going to an attorney and saying, here's what I have. But you may need that initial review by an accountant, especially if you're dealing with this accountant for regular purposes, right? You're filing taxes, but they really have a handle on your financial situation. So you can certainly start there. To gather all of that. They're going to be your go-to to get everything in order and package it out for you. But your attorney really is going to be the one to push you through the process and assist you. I shouldn't say push it, assist you through the process as to what you should be doing when. But like I said, individual basis will determine where you kind of want to start with that.
And is there any sort of checklist or that I should be following to make sure that I have everything before I file for bankruptcy?
Yeah, so the courts have actually done the bankruptcy courts, the federal bankruptcy courts have done a very good job of packaging this up nicely so that individuals can make this process, a difficult process, a little bit easier. So if you go online and look on websites, whether it be the New Jersey bankruptcy courts, I even was digging around and found that on New York bankruptcy courts, they literally will have a checklist. So it's something where you can just print out and say, check, I have it, I need this to file. And what you're preparing is you're preparing the information that's going to go on schedules that are going to then be presented. It ends up being like a little packet for the court where it summarizes everything. So this information, as we've discussed before, everything that you gathered for your professional, whether it be your accountant or your attorney, what you've put together, you're going to want to include in here. And there's other podcasts we have where we discuss don't overlook anything, don't miss assets. So you want to include all of that on these schedules. And within these schedules, you're also going to have a statement of financial affairs. And again, that's going to be like the sort of summary of it all. And it really just captures the recent activity and transactions that you have. And like I said, good resource, great resource is to go on the bankruptcy court websites, depending on your jurisdiction and where you sit, where you're at. But they'll give you sort of that checklist and lay it all out for you.
Great. Now, like I said, I'm in trouble. What kind of costs am I looking at to file bankruptcy? Is this going to be expensive just to file? I'm already in trouble, as I said.
I know, right? You're thinking you're in a situation where money's obviously an issue, and now we're going to have to pay more. And you're looking, statutory imposed are filing fees. So depending on the chapter that you're filing, you're going to have to pay the filing fee to the court. It's in the chapter 7 and the 13, it's in the 300 range. When you go to an 11, which would be, as discussed in other podcasts, your corporate type, business type filings, you're going to be in the upper rate. You're looking at $1,700 in fees. But as we also mentioned already, was the idea of, you're going to bring in an attorney, you're going to bring in other professionals. So, you have to weigh that against what your financial resources are. But like I've said before, it's going to be critical to help you get through the process. Attorney's fees, if you just do like a general idea of it, they could range from $800 to $5,000 for a simple bankruptcy. But then, there's situations that aren't so simple. That it may be a little bit more the cost in doing that, and then you're looking at a situation where if you're doing a chapter, if you're a 7, it's going to be pretty much a simple bankruptcy. But if you have multiple sources of income, you have a significant number of creditors, you have other legal actions. We talked about that. You get to the point of where you have judgments filed against you. You're trying to address all of that. And you have non-dischargeable debts, it could be in the upward range. I mean, some sources say it could be up to $5,000. And then the chapter 11 is a whole nother issue with a bankruptcy for a corporate or business entity, where they're looking at $10,000 at almost as a starting point. So while you recognize that it's a tough position to be in already, I would say, as I've mentioned before, you're looking at this is going to be an investment because you want to navigate this process as smoothly and as efficiently as possible. So these costs will be worth it at the front end. And really, I mentioned this to a colleague, and he said to me, "Well, what's the cost for not filing?" That's the real question. What is it going to cost you when you don't file for bankruptcy and you don't have the guidance of a professional?
Absolutely. Great point. So you've convinced me. I
Yeah.
need to file. Should I make any agreement or speak to any of my lenders before filing?
Yeah, I mean, it's a great concept to start thinking, okay, how before I file this, can I work this out? There may be a situation, depending on your what your debts are, that you may be able to talk to a lender and get alleviate some of the burdens that are on you and work out some sort of alternate arrangement. Um, the automatic stay once you do file will prevent you from doing all of that. So you need to be careful. And again, we'll discuss this in another podcast about whether or not you're making preferential payments or you're picking and choosing your creditors. So you want to steer clear of that type of thing. But if you can work out um, try to keep out of bankruptcy by talking to your lenders, and it's something that's fair and equal to everyone, you should give that a try. But if your situation is one in which you as an individual or a corporation or business think, I can't work this out, then again, we go back to the idea of you need to talk to a professional. They'll guide you, give you advice, whether this can be resolved or bankruptcy may be the only route.
So should we get some kind of agreement on the plan then before we file?
Yeah, there is a thing, a concept that's a prepackaged bankruptcy. So you can come to the bankruptcy court with everything set up in terms of what payments are going to be made under the plan. You just, again, as we've discussed, have to watch the preferential payments. You have to watch that because you may make a preferential payment, and as discussed in another podcast, you're looking at a clawback situation. But once you file for bankruptcy, you do have 120 days to submit a plan. So, this is a time where you can take a lot of the extra costs off the table if something can be worked out.
Great. Now everyone has to pay taxes. Does that still continue while I'm filing bankruptcy?
Yeah, you would like to say, okay, everything stops. You have that automatic stay. You think it freezes everything, but obviously, you know how it is, John, you're going to be paying taxes. So you really want to stay on top of that. You're going to have to pay your taxes even after filing bankruptcy. Again, with them in our podcast sessions, we'll address that and what that means and how to do that. But don't get in a position where you're going to be like, well, automatic stay, automatic stay. You really need to be aware of what that doesn't stay, and certainly filing your taxes is something you're going to need to do after filing bankruptcy.
Understand. Let's shifting gears a little bit. As a business owner, if I was filing, what type of items would I have to produce in that situation?
Yeah, it obviously is going to be a little different because your assets, your liability, everything, you have a little bit different of a context. But what would really be important for businesses to keep in mind are, your cash flow situation, because for a bankruptcy, for a business, you're going to have to produce cash flow projections. Typically, it's like a 13-week projection of what you anticipate coming in, and it's going to be stress tests. It's going to be pushed to the limit of whether or not that is going to hold true as to whether you can make these payments and do so under the plan. So businesses really should consider consulting a professional. In this case, you're really thinking bringing in the accounting professional because this will take it to the next level for bankruptcy purposes.
Now, I have a couple of personal guarantees on business debt. How would that be treated in this type of filing?
Yeah, it's something that it's really an unfortunate area if you get caught up in it, because what happens in the business bankruptcy, if that's what you're filing, it's not going to avoid the personal guarantee. So, business is filing, you're thinking, okay, this is result, we're covered. It's not. The personal guarantee is a personal obligation and not one of the company. So even if you as an individual personally in your personal life may not have an issue with, any of the bankruptcy context, not a problem, making your payments and all of that, but the business does, you still may be have to lead you to filing bankruptcy personally because you're going to be personally obligated. That business umbrella of bankruptcy will not cover you. So, that's something where you really want to be careful with personal guarantees, because it's an area you don't see coming until it's upon you, and it's a tough spot to really be in when you're filing a personal bankruptcy as a result.
Yeah, absolutely. And with the last question, it's a little bit different than the rest, but I've heard my attorney saying we need a stalking horse, and I just nodded along, but I have no idea what that is. Can you explain that to me?
Yeah, it's almost an odd thing. You're like, I've never heard that. What does that mean? And it's specifically to this context of you're in a situation where bankruptcy has been filed, and you're going to sell your business. So now we start with that premise that you're going to sell your business, and the stalking horse actually sets the initial bid on the assets of the company. And it really just, they do their due diligence, they do the negotiating, and they set the floor of the transaction because they're trying to drive up the price for the sale, because that's what you ultimately are going to have to do. Now you say, okay, if you're a stalking horse, the party that's the stalking horse, why would you do that? There are incentives. It's a system designed that you're going to get expense reimbursement, you're going to get fees. You're going to get certain fees, that is, you're going to get a favorable bidding position, and you may get an exclusivity arrangement. So it's really a way to just move things along and to get the business to sell, because nobody wants to be first out, right? Nobody wants to be the first one to set the floor on something and do all their homework in a situation where a company is obviously not performing well. So this is a concept that's out there that says, you know what, we need a stalking horse, and this individual or party or entity will come in and do that.
Great, thank you, Missy. That was really helpful. And I hope everyone else found the information on pre-bankruptcy planning helpful as well. Should you have any specific questions regarding your unique circumstances, please reach out to a member of our team. Our contact information can be found at witham.com under the Forensic and Valuation Services. This episode, as well as others in the series, can be found at witham.com. And thank you for listening to Witham's Perspective from Bankruptcy Cliff.
Thanks for joining us. Be sure to subscribe to our podcast so you'll be first in line to hear what's coming next. Don't want to wait for our next episode? Check us out at witham.com. That's WITHUM.com.